Good morning from Chicago traders. It's 8:02 a.m. Chicago time on Wednesday, the 7th of April, 2021. This is episode number 1967. Just a quick mic check. Just make sure that I'm not blowing out your headset or I'm not sounding too faint. Just let me know. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. A fair amount to cover today, but we'll start with the pre-market summary sheet just to give us an overview of what we've got for today. The market today is in a risk-off posture across the board. I'm seeing red across my quote board. Silver being the weakest. Silver's down 13 ticks, and that represents about half a percentage point or 52 basis points. Crude oil, crude oil is still hovering around the 59.66. Crude has been mostly sideways in the overnight session. Crude is leading with plus 0.44%, up 26 cents on the May contract. The euro is up slightly, the dollar's up slightly, the Bund is up slightly. The 10-year is flat, unchanged on the session. The S&P's down 5, Dow down 41. The bonds are down 8 ticks. So overall, pretty flattish to risk-off sentiment so far today. So that's what we've got going for us coming into today's session. This morning we did get a few numbers, the key of which was balanced trade came in slightly worse. It's $71.1 billion deficit versus the expected $69.8 billion. And we still have AIA crude oil stocks at 10:30 Eastern, Fed's Barkins at 12, and the FOMC minutes, which could be a mover, at 2 p.m. Eastern. The S&P has traded 140,000 contracts. The inventory is negative 24, which tells us the inventory is short 24%. We had 14 points. I believe we still do. Let's see, 7150. Yeah, we have about 15 points of range currently. The profile is pretty much balanced. We'll go over that in a minute. And that's where we stand. So we're coming into a day where the volume is slightly light, where the market sentiment is risk-off. The overall posture is risk-off. But it's nothing heavy. The weakest index we currently have is the Euro Stoxx 50 out of Europe, down 0.48%. So overall, pretty kind of choppy environment to come into. So that's where that stands. Looking at yesterday, this was the plan for yesterday, and we're looking at. I was looking for a mostly sideways day. We did end up taking out the high yesterday, which I didn't anticipate. I expected it to really crawl around. So scenario one was looking for a test up into the 67.50 to go sideways down to 40.50 and then just hold sideways. I expected a sideways day. I expected a rest day, and I did say that this is unusual for a Tuesday. Tuesdays generally have a pretty good range and a pretty good push. But what we got was something that was a little bit in line, but not exactly. We did push higher than expected. We did not give up as much territory as I'd expected. So that's where that stands. What is going on here? Sorry, excuse me. So that's where that stands. We opened up at 40.6150. We had an open auction in range. The opening swing was 59.75 to 63 and a quarter, and you can see that it pushed through to 58.75. This is our review segment. We pushed to 58.75, and then we quickly squeezed into the prior point of control at 67.50. This is where I expected it to find resistance initially. 67.50 was looking for to consolidate there and then give up and then rotate down. That was scenario one. And you can see that it formed a tiny little zipper here, two-way action as expected at the point of control, and then it squeezed through to one tick the prior day's high and then consolidate. What we built is a nice little zipper here, something to pay attention to into the future, but we ended up with a pretty weak high at 75.75, and then we went to 75.25, and then we went to 76. We one ticked the initial bounce high, and then we sold off. And what we did leave is a weak high in the ES on the day session. It does not look like an excess to me. It does not look like we found sellers. And I did expect it to rotate down for the session. I expected it to go and start filling in this area down here, the flagpole, the thin area down into the 38. That's my expectation. What it did is it rotated down, consolidated in the middle, and then it extended the IB low. So we've one ticked the IB high. We've extended the IB low, not by much, by 2 ticks. It's not really a full range extension, and we finished inside of the initial bounce. So what we had yesterday was what's called a neutral normal day. This is a day that basically where the market is just kind of battling both sides, and we saw that this is evidence that the market is starting to kind of peter out. If you notice that for the entire session, as the market pushed up, the delta was negative yet again, and it continued to just slope down for the entire session, even though much of the action was sideways, and also even though the majority of the action was above the open, which is the 0 line for the delta. So again, as the market pushes up, we're finding that they're having a hard time maintaining aggression at these higher prices. And to me, this looks like a market that is rounding off and is starting to potentially push lower. In the overnight session, we pushed to 52.25. Remember yesterday, the target was around that 52 to 50 area. You can see the stock zone there. I should remove these stock zones for the review. But the target yesterday, let's go back to the summary sheet or the yesterday's action. I was looking for to battle down into this 50 area right there. Scenario 1, push to 67.50, rotate down to 50, consolidate, hold sideways into the session, and then what we got is a push higher. So we took scenario 1 and we simply had the same range, and we shifted everything up about 7 points. Instead of the 58.25, I expected around 50 to 52, and instead of 75, 76 high, expected 67.50. But overall, the shape and the structure, the action was the same. So the delta was negative, and that's where we left things. We left things in a kind of a multi-distribution profile, not quite a nondescript day yesterday. Here's what happened in the overnight session. We opened back up. We pushed higher. Where did we push higher to? We pushed higher into the prior day's point of control. That point of control is 71.50. The overnight high is 71.50 on the nose before it sold off, pushed back up on the European Open right in here, put in a lower high, and it was weak from there on out, pushing the low to 56.50. So what we did is we have successfully tested underneath yesterday's low. We did not get to yesterday's extended hours low, but we are starting to poke into what I would have expected, this thin area that we left behind from the prior session. We're starting to poke down in there, and that's what I'm looking for over the next couple of days. So overall, I am expecting this thing to roll over just as I did yesterday. The volume currently 143,000. It's pretty light. Here's the big picture overview. We formed balance yesterday with the day before. We've formed a point of control up here in the 71 area or so, and we're holding steady. We still have weak structure below us. We have a gap zone. We have thin structure from about 60 down, and so on and so forth. It's just a question of, does this thing roll over, or do we hold steady and keep squeezing to 4,100? We got from the 3,900s through the 4,000s, through the 4,000 handle very quickly. Traditionally there's a tendency to push up in April, May. You've heard the term, the adage, sell in May and go away, or something like that. It kind of does this ramp up February, March, April, May, mid-May-ish, and then things slow down a little bit into the end of Q2. So to me, what we have to look for today is, does it maintain yesterday's low? Are we able to maintain yesterday's low? Yesterday's low is 58 and a quarter in the day session, and if we break through the 58 and a quarter, we're likely to get down into that 38 relatively swiftly, because we've left a string of singles underneath there. Here's what that looks like. This is a market profile chart. And for those who are not familiar with market profile relies on 30-minute brackets. So it's a time-based way to organize market action. These are 30-minute bars that have all been collapsed together into these squares, or actually letters, as you zoom in, called TPOs, time price opportunities. So you can see that it left a string of singles down here from about 57 down. So this is a flagpole, and as we push lower, if we push lower today and take out yesterday's low and start to squeeze down into and below 56.50 or so, we are likely to see 38 relatively quickly. That's a key plan. That's a key opportunity, in my opinion. Of course, mind your risk, but to me, that's kind of the quick money move. If we do get that today or tomorrow, as we remain stuck in this high volume node on the daily, and you could see we still had yet again a strong-ish pop, on the delta. You can see the delta had another squeeze lower, and it just continues. So that's our review segment. Let's take a look at what's expected for today, so you all can run off and do your pre-market routine. So what are we expecting today? Here's what I'm looking for. I'm looking for the primary scenario here. Let me get my colors right. Primary scenario here, we're opening up underneath the bulk of the where the action was yesterday. We have a big area here at 63 to 65 has a bit of confluence. This area here is likely to be a good area to watch today. I'm expecting resistance in here. The expectation this morning is a slight responsive buying spree into this 64 to 60 65 area, 63 to 65 area. So let's put that in here. 65, 63. Expecting responsive buying. If it fails, and I'm expecting it to fail to push through, and we rotate down, take out this 58 quarter, we end the one-time framing up on the daily time frame, which is likely to squeeze weak longs, late longs out. And if it does, we're likely to push through that 56 area and start working ourselves back to 50, expecting a response at 50, come back, and then I'm looking for it to start working its way down into, I'm trying to be conservative with range given the level of the VIX and the level of volatility recently, but it could continue and it could turn back up. I have no idea. But the key element with scenario one is as we respond higher, I'm looking for reloading sellers. I'm looking for weak buying. I'm looking for a fight between 63 and 65, okay? The secondary scenario is what happens when we're not able to do that. The secondary scenario is likely an open auction that falls down a little bit, then responds back up, consolidates into the 63, 65, grinds through this area, pushes through the full session mid, full session VWAP, which are in confluence with this area, and then starts to work itself back up into the 67.50, which was the point of control from 2 days ago, and then the 71.50, and starts to squeeze back up. In this case, it's a short squeeze, and the shorts are going to pay up dearly because the expectation is that it is weakening, and it's likely to just kind of do one of those grind days up. And this is a very possible scenario because of the time of month and the time of year. Remember, we're still at the beginning of Q2, so money's still being allocated from closure at Q1. So we're still just a few days into Q2, and there may be money that still needs allocation. So as we saw here, the market is just throwing money in. Participants are throwing money into the market and pushing through some seriously big areas like the 4,000, the 40.50. I mean, to melt through the 40.50 here, it's relatively unusual. To hold it from the top, like right here, that's okay. But that's what we've got. I'm not hoping for scenario one. I'm not hoping for scenario two. I'm not going in there and trading both of the either one of these. What I'm doing is deciding what is important. What is important is 63 to 65, and then the 51 area, 51.50 area, and then beneath there we get to the 38. These are important areas. Above there, 67.50. 67.50 was the bounce from the rally. 71.50, which is yesterday's point of control, and that brings us back up to all-time highs. That is an awful 71.50. I apologize for that, but so that's what we're looking at: 63, 65, 67.50, 71.50, and then 76 to all-time highs, or 60, 63, 65 battle. Push through the overnight low, push through the 58 and the overnight low of 56.50, down into 51, jockey around in the 50-51. We have some single prints down there as outlined here, some single prints from 2 days ago. Jockey at 51. If it gives up 51, I would want to be short and hold to 38, or get as close to 38 as possible while reading the order flow. That is the plan for the day. Good luck, and hopefully you gain something today. Take care.